I welcome representatives from the Australasian, I should say, Centre for Corporate Responsibility and also Ethical Partners Funds Management. Could I first ask that representatives from those organisations state their names and the capacity in which they appear before this committee, probably starting with the Centre for Corporate Responsibility.
Good morning, Mr. Chairman. Can you hear me?
Certainly can.
Great. My name is Daniel Gocher, the Director of Climate and Environment at ACCR.
I'm Nathan Parkin, the Investment Director at Ethical Partners Funds Management.
And I'm Robin Parkin, the Head of Sustainability at Ethical Partners.
Thank you both very much. Thank you all very much for coming along. I'm going to say this hearing is a legal proceeding of the Parliament. The giving of false or misleading evidence is a serious matter. It may be regarded as contempt of Parliament. Evidence given today is being recorded by Hansard, obstructs parliamentary privilege. And I invite you to make an opening statement, again, probably starting with the Centre for Corporate Responsibility, and then we'll go to Ethical Partner Funds Management, and then we'll move on to questions and discussion. Members who want to ask questions, please indicate so in the WhatsApp group. Thank you.
Thank you, Mr. Chairman, and good morning, members of the committee. Firstly, I'd like to acknowledge that I'm dialing in from the land of the Gadigal people of the Eora Nation and pay my respects to their elders past and present. My name is Daniel Gocher. I'm the Director of Climate and Environment at the Australasian Centre for Corporate Responsibility, or ACCR. ACCR is a registered charity with the ACNC. We invest in and engage with Australian listed companies in regard to their performance on various environmental, social and governance issues, or ESG. One of those is climate change. We also engage with institutional investors and seek to understand and influence how they manage climate risk. As per our submission, the EU has progressed its plans for a carbon border adjustment mechanism, which will tax imports of carbon intensive products, including cement, iron, steel, aluminium and fertiliser. While the draft legislation is yet to pass the EU Parliament, it is part of the EU's plans to cut emissions by 55% by 2030. Canada, Japan, the UK and the US are also considering similar carbon border taxes. And just last week, the Japanese government published its draft strategic energy plan, which is intended to reduce emissions from the electricity sector by 46% by 2030. The plan implies a 50% reduction in electricity generation from gas and 45% reduction in electricity generation from coal. It is likely that these targets will have a huge impact on Australian exports. Independent analysis suggests the targets imply a reduction in demand for Australian LNG of 10 million tonnes per annum and a reduction in demand for Australian thermal coal of 26 million tonnes per annum, or approximately 12 to 13% of our LNG and coal exports. As we stated in our submission, many of our largest trading partners, particularly our largest export markets, have committed to reach net zero emissions by mid-century. We should expect that other countries will follow the EU and Japan's lead in implementing more ambitious policies in order to cut their domestic emissions. For years, governments of all persuasions have taken a market-led approach to addressing climate change. In practice, this relies upon market participants, both listed and unlisted companies, to determine their own strategy to reduce emissions and the timeline in which they do so. Banks, insurers and super funds are rational actors responding to market conditions, making decisions to lend to or invest in companies based on an assessment of risk. That is how the market works, and forcing them, as some have suggested in this inquiry, to lend to or invest in certain industries would be an absurd intervention into the market. If Australia is to deliver on its commitments to the Paris Agreement, it needs urgent, integrated government policy to reduce emissions across all sectors. To date, the market solution has failed to reduce emissions at the speed required. In the absence of government policy, the communities currently reliant on coal and gas exports will be at risk of dramatic and abrupt disruption. I'll now hand over to Nathan and Robin Parkin, and I'm sure that they've got some opening remarks. Thanks.
Thanks for your opinion. Over to Ethical Partners.
Thank you, Chair, for the opportunity to talk today, and good morning to the members today. My name is Nathan Parkin. I'm the Investment Director of Ethical Partners, a fund manager that manages money on behalf of super funds, individual investors, schools and charities, and invests in companies listed on the Australian Stock Exchange. Ethical Partners currently manages around $2.5 billion on behalf of our clients. I'll briefly describe our investment approach, which I think will be helpful in explaining how we assess risks and opportunities using a process that formally incorporates environmental, social and governance factors. Ethical Partners has a medium to long-term investment horizon, and our approach uses traditional fundamental analysis on a company-by-company basis. We consider companies' balance sheets or debt levels, cash flow, and the quality of management teams and boards. We also incorporate a company's approach to human rights and environmental issues. This is because we believe there is both a financial risk and opportunity in companies' approach to ESG. We don't look at investments on an ideological basis, and we base our investment decisions and views according to acting in the best financial interests of our clients. And it is this test that determines our view on whether to not invest in each company. Our decisions on which companies we own and how we vote at company AGMs is made in-house and informed by our team of experienced financial industry professionals. It is not superimposed on us from proxy advisors or outside interest groups. Our decisions are also informed by interaction with companies through engagements with the chair, board and executive management of every company we invest in. These conversations regularly include dialogue about how companies can mitigate ESG risks, transition parts of their business most at risk, and how to remain relevant for investment. And using a systematic approach means that ESG risks and opportunities are considered for all sectors and all companies we look at. Two of the sectors that have been particular interest in this inquiry, however, have been the resource sector and the agricultural sector. Ethical Partners has around $270 million invested in companies that operate in the agricultural sector today. We do this because we ascertain that these companies are good investment opportunities for our clients, and the fact that they are using the current time to introduce initiatives into their businesses that address ESG challenges. Some of these initiatives will become substantial investment opportunities in their own right, in our view. Ethical Partners also currently has around $500 million invested in the resources industry in areas such as steel, copper, iron ore, nickel and lithium, in companies that have tremendous opportunities in the energy transition that is taking place globally. For some companies in the resources space, such as fossil fuels, it has been difficult to justify long-term favourable valuations in a world that is rapidly changing. ESG issues are now relevant to most sectors of the economy, including utilities, insurance, banking, apparel, retail, amongst others. And we believe that those companies that can demonstrate an ability to mitigate ESG risk and create opportunities and as economies transition will attract capital.
It's also important to note that it's not only climate risk we look at, but also human rights and other social and governance risks. They all have equal weighting in our assessments. And I think it's also important to reiterate that working with companies to encourage them to manage these risks and find new opportunities is always our first preference. Voting is a well-respected shareholder tool that is only used when companies are not making the necessary changes to maintain their financial strength through the energy transition we see globally. Divestment is our last resort, but we would much rather see the companies adapt and to see an orderly and just transition to a low carbon economy with continued employment opportunities and operational capacity. Lastly, our economy does not operate in isolation, and when global reinsurers, export partners and corporates' value chains are all adopting regulatory policies around climate and human rights, this inevitably flows through to Australian companies, creating risks and opportunities for shareholders over the long term. And it's also really important to point out as my last point that the consideration of the financial risks of ESG and investments is not a minority activist approach, but instead it is a global investor response that includes the biggest investors in almost all countries globally. For example, there's at least $103 trillion under the principles of responsible investment that have committed to consider ESG risks in their financial analysis. Thank you, Chair.
Thank you. Move to questions and discussion. Just have a couple of questions for the ACCR. As you've stated, you're registered as a charity with the ACNC, and I noted, I should say congratulations, I noted that your reported income was up from $385,000 in 2018 to $1.56 million in 2020. Just wondering, who are your donors? Individuals, philanthropies, corporate entities, or institutional investors?
Thanks for the question, Chair. I suspected you might ask me that one. You've got it right. Individuals and philanthropists mostly. No corporate money, but happy to provide there is a detailed list on our website. I'm happy to provide that on notice.
Oh, that'd be good. Is any of that funding from overseas?
Yes, but it's a very small minority.
Okay, and that's listed in the list that you might send us?
Happy to provide that, yes.
Thank you very much. That's the only questions I have. Over to the Deputy Chair.
Actually, Chair, I missed the last. You cut out with that last question. Sorry, can you just repeat it for me? What you asked?
Just asking about the funding sources for the ACCR. That's all.
Oh,
They're
okay.
going
And
to
the
send
last
it
one
to
you
us.
said, is someone included in your investors? Sorry.
No, I asked if any of the funding was from overseas.
Oh, okay. Thank you. Sorry about that.
Right.
I'm having difficulties with my phone today. I apologise. It's coming in and out a bit. Thank you very much for your presentation. I'm just wondering, we've heard it suggested here this morning, you may have heard with the previous line of questioning, that net zero by 2050 is an arbitrary target, an arbitrary figure that doesn't just been plucked out of the air. I'm just interested in your view of that. I mean, my view is that there is actually quite a lot of science between net zero by 2050, that this is a target set by world experts, that it is really probably farthest from an arbitrary figure that you could possibly get when it comes to a global agreement around something like this. What's your view of the target, and do you think targets play an important role in managing expectations and activities?
Happy to jump in there first, Nathan, Rod. Thanks for that. Look at it is based on science. That's the short answer to that question. It's not an arbitrary number, and that science is driven by the IPCC, which Australia's a fully committed signatory to. More importantly than the target to 2050 is the target of 2030. A lot of talk is around net zero by 2050, but it really matters what we do in the next 10 years. The next 10 years is critical. It is called the critical decade by the United Nations. And Australia's 2030 target is simply inadequate. And it's actually our view that net zero by 2050 is not ambitious enough. I mean, we really should be looking at net zero by 2040. That 2050 is really only gives us a 2 in 3 chance of limiting global warming to 1.5 degrees, and that's really a risk not worth taking. So, in our perspective, 2030 is the main game, and 2050 is simply not acting fast enough.
If I could jump in with a comment there too, Dan. Additional to the science that Dan's talked about, it's the target that the global economy has accepted. And back to my point that we're part of a global economy, if that is what everyone else is moving towards, then that is the target that we need as investors to be putting into our risk horizon.
But it's not just some arbitrary figure that someone plucked out of the air, is my point.
No, I don't believe so.
Well, no, it's not. I don't think it's a matter of belief. I think it is actually based in science.
Very much so.
It's also been suggested throughout in various quarters that if you are pro the Paris Agreement or net zero, then you must be anti-mining, anti-jobs, anti-worker. What's your perspective on that view? How would you comment on that?
I think the economies and businesses transitioning to low carbon energy and the like, and battery technologies creates a tremendous amount of activity and opportunities for those businesses that are positioned to do so and position themselves to do so. Our investments in both agriculture and resources indicates we do think there is tremendous opportunity there. and we wouldn't have those investments today if we didn't think there was a good level of growth to be had going forward, both in economic activity and jobs, and for the economy in Australia as well.
If I could reiterate our opening statement, one of the reasons that we do engage so heavily with corporates on transitioning is because we're very pro-job, very pro-community. We don't want to see those communities left as the global transition moves on. We would like to see companies begin an early, orderly transition. There are great opportunities in the resource sector as we move towards low carbon technologies. There are lots of transition metal opportunities. There are lots of resource opportunities, but because we are pro-job and pro-community, we would like to see early and orderly transition to protect those communities and jobs.
I'll add one more comment as well, if I can. And we did point this out in our submission, is that BHP itself believes that the 1.5 degree scenario is the best for its business. That's the world's biggest miner says that. So if it's good enough for the world's biggest miner, it should be good enough for Australia.
Mm-hmm. Thank you. And just carrying on from that, what can you expand a little bit on that? What role do you think industry and indeed financial institutions have in supporting government action to meet its commitments under the Paris Agreement? What should they be doing, financial institutions and industry?
Dan, would you like to take that first?
I'm happy to go first. Well, I guess the different institutions, it's a different approach. For the banks, we would like to see them direct more money towards the transition, whether that's investing in whether it's renewable energy or infrastructure that reduces emissions. ANZ has said that they will engage with its 100 largest customers to reduce emissions. We think this is a good approach. And the other banks have made similar types of commitments. For super funds, it's a bit different. They're directing money for the long term, so they might be looking at investing in renewable energy. It could be looking at minerals of the future, whether it's copper or nickel, etc. So you're looking at the types of companies that are producing those resources, and looking at the companies that stand to benefit from the transition. And that might be electric car makers. It could be battery producers. It could be any number of different options. So Nathan, Robin, do you want to start?
Yeah, I just reiterate from our side, we think it's firstly about investors talking with boards and chairs and engaging on these issues and the opportunities, which we do all the time. Then it's about, as Dan said, directing capital to the opportunities, and it's about supporting those companies that are changing, which is why we have holdings in resource sectors and agriculture sectors, supporting those companies that are making those transitions.
Thank you. I'll leave my questions there, Chair. Thank you.
Thanks very much. I think we had Senator Steele-John, but he may be absent. I'm just checking that he's not there. Senator Steele-John? No, he's absent. I will come to him as soon as he comes back. Can I just ask a quick one, though? Do you, both organisations, do you believe that there should be proactive measures and actions by government to shut down the coal mining sector? Not just talking about governments in Australia, worldwide, even actions from other countries. And likewise, do you believe there should be proactive measures from financial institutions and other investors to divest from the coal mining sector and other fossil fuels?
Happy to jump on that one first.
Thanks, Dan.
It's less about shutting down the industry, Mr. Chairman, and more about limiting the expansion, and they're two very different things. The IEA Net Zero report that came out in May suggested that we have sufficient coal, oil and gas production operating now that will assist in the transition to 1.5 degrees, but we don't need any new expansion, and any new expansion jeopardizes that target.
So new expansion.
So it's less about shutting down the industry and more about the expansion.
Well, I think that's semantics, because if you don't expand the industry you do shut it down, because any coal deposit is a finite resource. So no expansion means you want to see the shutdown of that sector, correct?
Well, we are talking shutting down over a long period of time. We're talking, 30 years, Mr. Chairman.
But you do
and
support the shutdown of it, even over a long period of time. You support
over a long period of time, absolutely.
and you support government measures to shut it down.
If those measures are to address the transition and to assist those workers into moving into other industries, absolutely. Don't you?
But regardless, you support it being shut down. Not asking about transition. I'm just asking the pure question: do you support the mining sector, government measures to shut it down?
Not the mining sector, Mr. Chairman.
Okay. The coal mining sector.
Okay, so we're talking about the coal mining sector is two very different things, as you're aware. The thermal coal mining sector is far more challenged than the metallurgical coal sector because we don't have a solution yet for metallurgical coal in steelmaking.
Let me get really specific then. Thermal coal mining. Do you support the government shutting down thermal coal mining? Government actions to shut it down.
If it's an orderly transition, absolutely.
So if it's not, you support the continuation of the thermal coal mining sector.
That's not what I said at all.
I
suggest measures that would support the orderly transition. Yeah.
No, I'm just simply asking. I'm not asking about transition. I'm asking, do you support the shutdown of the thermal coal mining sector? Active measures by government to shut it down.
Mr. Chairman, Australia is committed to the Paris Agreement. Do you understand what that means? That means that we have to pursue policies that limit global warming to well below 2 degrees and preferably 1.5 degrees.
That doesn't implies shutting down coal
the closure of the thermal coal mining industry.
Well, that's your opinion.
It is a commitment that your government has signed up to. Your government.
Do you support financial institutions and the financial services sector taking active measures to limit investment and finance into the coal mining sector?
Those decisions are based on a risk assessment. So
no, I'm not asking about what they might be based on. I'm asking what you support.
I support financial institutions that refuse to expand the industry, the fossil fuel industry.
That's great. Okay.
If we could,
I'm going to move back to Senator Steele-John.
Oh, could we add a comment in there, please, Chair?
I'm happy for you to. Yep.
Thank you. Would you like to say something?
We don't, as an investment professional looking to invest in the shares of businesses, we don't have a position on what should or shouldn't happen, but we do look at these things with respect to risk. So financial institutions, the shareholders wear, the risk of bad debts into the future. And I think from that point of view, for those institutions to assess these things on the basis of risk and the repayment of loans, particularly in probably challenged areas of the economy going forward, is something that we think they should do. Whether or not you think things should be or shouldn't be shut down doesn't make it necessarily an attractive investment proposition either. And so we look at it from that lens.
If I could just add, the use of the word shut down, and I know it's an overused word, but we don't believe companies have to shut down. We work with them to transition their exposure away from coal and towards the other metals that will be needed in the new global decarbonised economy. So, for example, we hold a company that is decreasing its coal exposure and increasing its transition metal exposure. It's not shut down companies, it's helping them to adapt to a new economy.
But it is shutting down coal mining operations.
Well, no, it's working with them to adapt to another mining operation.
It might be shutting down a coal mining operation and beginning something new, but it's shutting down a coal mining operation. I'm going to move on to Senator Steele-John.
Thanks for coming along and bearing with certain members of this committee as they grapple against the bathtub edge of reality. I noticed in your submission that you state very clearly the well-known fact that 4 of Australia's 5 primary
point of order, Chair.
Are
Chair,
setting themselves the goal of net zero by 2060. That's correct, isn't it?
I think that question's to me, Senator. Yes, that's correct.
Yeah.
Well, China's is 2060, but the other countries 2050.
Yeah. It's also the so in that context, then we are not actually talking about whether or Australia's coal industry, thermal coal industry, and you're right to make the delineation between thermal and metallurgical coal, is going to be closed down. The question is closing down. There is not a future in it economically. What the for the workforce look like? That are the original planet when it comes to global warming. That's actually the question before us, isn't it?
That is right. Yes.
We would agree.
So if Australia does nothing, the transition will happen to us.
Absolutely. And now it's still the case, isn't it, that primarily our primary market for thermal seaborne coal is India. And India have adopted a quite clear ambition for a number of years now, either to transition to renewable energy or source their thermal coal domestically. That's the case, isn't it?
That's my understanding, yes.
Yeah. Again, what caused a great challenge if you're expanding the coal market here in Australia, you're creating more produce in a market. The demand is falling, causing the price to fall. And for an industry like mining, where the financial viability of a project is so closely tied to the price of the material you're exporting, that would be another factor that would make it a kind of a financially secure investment for your investors, wouldn't it?
You would think so, and reports that BHP is attempting to sell its, the largest thermal coal mine in the Hunter Valley suggest that is the case.
Yeah. Now, if we look at page, I think it's page 5 of your submission, you talk about, and I'll quote it to you, you talk about the Bank for International Settlements, the BIS, which acts as a bank for central banks, has 19 defined terms in relation to the green swan phenomenon to express the threat that climate change kind of presents to our financial institutions and systems generally. Can you explain exactly what green swan events are and the implications that they have for how international regulators and institutional investors?
Sure. In some ways, you could argue that what we're seeing play out in the Northern Hemisphere over the last month could be argued to be a green swan event, where you're seeing extraordinary heat waves across North America, across Japan, across Siberia, in addition to extreme flooding across Europe and China. Now, these events have, are systemic problems, and they play havoc with supply chains. So companies who think that they're not exposed to climate risk all of a sudden become very exposed because supply chains begin to collapse. So there is that issue, but there is the additional issue of what we call tipping points, climate tipping points, and some scientists are suggesting that this last month of events in the Northern Hemisphere suggest that we are hitting certain tipping points, and that's a real concern, because then you're not talking about a transition over 30 years. Then you're talking about a transition that we need to make far more rapidly. So I think that answers your question, Senator, but happy to provide more information if you need.
Yeah, I'd be really interested if you could provide to the committee some kind of case study examples of what that looks like in practice, if you know of them. My concern is, particularly here in Western Australia, we've got the communities down in Collie that have historically been primarily employed by the coal industry. We know we have different communities across the country that exist in the same context, and it's my deep concern are about to move from a space where you can have a conversation about a 5-10 year transition in a way that they can feel empowered through the process of to a kind of emergency situation, because things have moved past the point of our ability to influence them in relation to the financial viability of the industry. So if you could bring that to us, that'd be great. My last question is in relation to your commentary on 2030 versus 2050 target. If I understand your submission and your commentary.
Sorry, Sylvie.
Relevant target.
You've dropped out.
Can you hear me?
Yeah, you need to repeat it.
So I wanted to draw you out on the
Could I
distinction
just ask,
between.
I'm not sure whether or not these outages happen because people aren't muting. If you're not speaking, mute it. I'm just not sure whether it's transmission or whether it's because people aren't
Probably
muted.
my office. It's got pretty bad internet connection. Sorry. So I just one more time, and if it don't go through, we'll just move on. I just wanted to draw you out on the distinction between 2050 and 2030 as an as a net zero target. You were talking about. I think you mentioned that. 2050 as a target gives us, did you say only 1 in 3 opportunity of meeting our Paris goal? Is that the figure you used? Sorry?
2 in 3.
2 in 3. So purely from a financial risk mitigation perspective, 2030 is a more preferable target because it gives you more certainty as to the direction of the transition, the speed of the transition, and actually that we will mitigate the more serious impacts of climate change, which will make your investment environment more challenging.
All of those things are correct. So the idea about reducing emissions to 2030 is that you're essentially tackling the task over a much longer time frame. So instead of having a really steep reduction in emissions between kind of 2030 and 2050, you're bending the curve, so to speak. And there are numerous policies that could be enacted in order to reduce emissions by 2030 by far more than what we've committed to already. We have the technology today to reduce emissions substantially across various sectors. So this isn't about looking for a silver bullet. There are solutions available to us to get to take really big chunks out of those emissions in the next 10 years.
Excellent. Thanks very much.
Sorry, Senator Steele, if I could just add, you're very much correct. Investors do need a stable operating environment, and companies need. It's incredibly helpful for companies to have near-term targets so that they can actually plan. And they can actually work out their strategies for decarbonisation. So yes, we very much agree. And your point to the fact that the market has already decided this, they have. And we really just have to adjust.
Excellent.
Okay,
Thanks very much.
3 more people thank you, Senator. We've got 3 more people that are wanting to ask questions, and really I wanted to only go to 10 past 12. I'll allow it to go to 15:15 if we can try and keep our sessions to 5 minutes. I think that the next person who wanted questions is Dr. Molino.
Thanks, Chair, and thanks to all of you for coming to provide evidence. Look, I'll just limit it to one question, and I suppose it just builds on some of your answers to some of the questions that have already been asked, which is the broad concept that in general, business likes certainty and is more likely to engage in investment and R&D where that's the case. Now, we've talked about some sectors that are facing medium and longer term risks as a result of the need to act on abatement and international regulatory changes that are already coming into play. I mean, it's fair to say that in some of those sectors, greater certainty from a regulatory perspective will make their transition or their operations over the next number of years easier. And I'm thinking here, and again, without commenting on any particular opportunity, but for some sectors, like metallurgical coal and potentially even thermal coal in the next number of years, they might be able to make their operations function in a cleaner way. There are a number of things that have been out there for a number of years now, like carbon capture and storage, which seems to always be on the horizon but never attainable. But I suppose just as a general proposition, there are going to be upside opportunities potentially which are going to be more attainable the more certain is the regulatory environment, I guess, is my broad question.
Yeah, I'm happy to jump in there. Look, stock markets and capital, you're right, dislikes uncertainty, probably more than anything else. So the ability for companies to attract capital really ultimately depends on whether you as an investor, we as an investor can, determine what the probability of certain things happening are. So the lower the probability, or the lower, I guess, confidence you can have in the settings of the future and the markets of the future, the lower share prices will go, and the ability to attract capital in that environment is less. So absolutely, certainty and the ability to attract capital go hand in hand.
Thanks. Thanks, Chair.
Thanks, Dr. Molino. Now, I think it was Alan who had some questions.
Thank you, Chair.
No, sorry, I've got it wrong. Sorry, I've got Senator Van and then Dr. Allen.
No, I'm happy for Katie to go first, Chair.
Okay, yep, Dr. Allen.
I've only got a few questions.
Very gentlemanly. Thank you very much, Senator Van. Thank you so much for your submissions. My question goes to, I understand overseas many countries have committed to the 2050 target, and I understand that there's a lot of criticism about, well, what's the plan to get there? So my question is, as an investing group, are you technology agnostic about getting to lower emissions as a general principle, and investment or advising investors to be technology agnostic?
Do you want to start?
No, you can start.
If I'm understanding your question, certainly not. If there are technologies, we're very, very happy for companies to adopt whatever technologies they need to reach net zero, and we're very encouraging that. I'm not sure if I interpreted your question correct.
I'll repeat it again. What I suppose I'm saying is there's a lot of discussion today about the issue of the target, which I am supportive of getting to, provided we have a plan that we've engaged with the Australian community with. That's kind of my personal position, which is it's all very well to talk about a target, but how are we going to get there? So my question goes to, when you are advising companies about investments, are you technology agnostic about, as long as they are on a pathway or a plan or supportive of getting to lower emissions to get to the target? Is that your philosophical approach, or do you have a view about it should only be a certain type of technology that you'd support?
Right. Sorry, I misunderstood the question. No, we have no particular attachment to a particular technology. There are some that are obviously more promising at this point in time, but we are very open to new technologies and new pathways. It's important. What is important is those jobs are protected, that the companies manage to adapt and survive in a new economy, and that investors' capital is protected. That's what's important to us.
And Mr. Gocher?
It's a good question. I suppose we are agnostic. The question really comes down to the viability of these technologies and how much the company is prepared to invest in them. In the Australian gas sector, for instance, at the moment, you're seeing a lot of talk about hydrogen, a lot of talk about carbon capture and storage. But if you look at the capital expenditure of the companies in that sector, they're not allocating the capital to those technologies that you would expect them to, if those technologies are supposed to offset all of their emissions. So there's a disconnect between saying this is a technology that's going to save us and this is how much money we're spending on it. It's chalk and cheese. So it's that's the problem we have, and particularly something like carbon capture and storage, which I think Mr. Molino mentioned it, that it's always on the horizon. It's never actually happening. And if you look at how much money has been spent on carbon capture and storage in Australia over the last 20 years, it is in the billions of dollars, and we have very little to show for it, sadly.
And what about your view on third and fourth generation nuclear, including small modular reactors? I know it's not till 2026 or 2029 the first electrons will flow in Utah with NuScale, but what's your philosophical position about investment in new nuclear, considering we have a EPA which doesn't allow us to invest, but the companies that may invest internationally in new nuclear or in prospects that may be new nuclear in the future?
Look, the track record of new nuclear builds in Europe and the US suggests that it's too slow, too expensive, and renewables and batteries can do the job faster and more reliably than nuclear can. So until such time as this technology, which similar to CCS is always on the horizon, it's not the first time that, you know, small modular reactors have been talked about. This isn't a new idea. The Minerals Council have been talking about this for many years. You know, show us the proof of concept. It doesn't exist as far as we're concerned.
Parkin?
Look, there are certain clients that we have that would say no based on values, and that's fine. As an investment firm, we haven't looked at this as yet in an Australian context. There's no Australian listed stocks. It's not actually been a technological possibility for companies here. So I would have to, you know, say that this isn't our field of expertise. We haven't actually looked at it as a viable technological opportunity here. We're being practical and looking at what companies actually can use at this point. But look, it's not a blanket exception. We don't have a particular philosophical standpoint on it at this point.
Okay. Thanks so much.
Senator Van.
Thank you, Chair. Just taking up those questions from Dr. Allen, which I thought were very good. You say there are no listed, sorry, Mr. and Mrs. Parkin. I assume it's Mr. and Mrs.
Yes.
That's not correct.
Correct.
You say there are no Australian listed companies in the nuclear space. There is Toro and others that uranium mining companies. Do you invest in those?
We don't currently have any investments in I guess specialist uranium companies. We do have, and I don't know the circumstances of those companies off the top of my head, but we do have cash flow and balance sheet tests that rule a number of businesses out. And that's just purely from an investment point of view, not a philosophical point of view. We believe that those companies that have too much debt or no cash flow, we're not interested in investing in those. But I'd have to come back to you on that specific opportunity.
Okay, so if you could take on notice what, you know, there are both large and small, early stage and late stage uranium companies here in Australia. We are an exporter of uranium. It's one of our key points. So, you know, keeping on with our terms of reference, if you would come back to us with your position on backing uranium companies, given that nuclear power is a proven technology to reduce emissions and provide dispatchable power, that would be very useful to the committee.
Sure. Our standing position is that we're monitoring over 300 different investment opportunities, the top 300 companies in Australia. To my knowledge, there aren't any viable investments in that space. There may well be listed companies. There are 1,200 listed companies in Australia. They may fall outside of the size of investment that we're generally looking for. Perhaps they're small market capitalisation businesses that we wouldn't be able to do investing probably on the basis of size. But we can come back to the committee on if there are any such businesses out there that could fit.
Okay, and I believe there's closer to 2,500 listed companies on the ASX, but let's not split hairs. Mr. Gocher, you were denigrating CCS as a technology, you know, as always on the horizon. You seem to push batteries as an alternative. What makes you think it's any closer technology than CCS or hydrogen, for that matter? Aren't they both, or aren't they all you know, leading edge or bleeding edge technologies currently?
Well, I guess if you look at the results from Gorgon that were published last week, it would suggest that CCS comes with a lot of problems. They certainly haven't captured as much CO2 as they were supposed to under the regulations agreed with the WA EPA. Batteries are already playing a role in the NEM. So I don't know that they are, you know, new age batteries are leading edge, but there are existing batteries in the NEM that are providing doing an enormous role, to be honest. And we're not just talking about batteries in electricity either. You're talking about batteries in whether it's motor vehicles or trucks or light vehicles. So it's not there's a multiple range of uses for batteries. So
clearly, industrial use isn't one of them.
Yeah.
How long would Australia's largest battery run an aluminium smelter, for example?
that's not what they're designed to do, Mr. Van. I think you know that, and it's a disingenuous question.
So, but SMRs would be able to do that, and you
Sure.
just
Do they,
them. So
can you point to an existing example of an SMR globally, or
sorry?
Can you point to an example of an SMR globally?
There's one being built in Utah currently.
There's one being built, right? Okay. Well, then it's hard to assess how useful it is if it's just being built.
Worldwide nuclear technology is a very useful dispatchable power that comes with zero emissions.
Mm.
So, given that we export aluminium as well as use it here ourselves, why would you want to back technologies that don't allow us to smelt and export aluminium?
You don't actually need. You can make aluminium emissions free. I think you're aware of that, right? Using hydro, which we do in Tasmania.
So where are we going to get the extra hydro from, given Australia's?
Well, it doesn't necessarily have to be hydro, but you can. There are alternatives to produce aluminium without using coal or nuclear.
Such as?
You can use renewable energy to produce green hydrogen.
Well, why, if that's the case, why aren't our current smelters, investing in that?
I've asked Rio Tinto that exact same question, Mr. Van. I've asked Rio Tinto that exact same question.
So one would suggest that it's not economically viable.
I don't necessarily agree with that.
Would you take on notice then your mathematics and your arithmetic on showing us how that might be done?
Sure. There's actually a paper I can point you to right now, Mr. Van. If you just Google IEFA, they've done a report about the decarbonisation of the Tomago smelter in Hunter Valley.
Okay, if you'd provide that on notice to the committee.
Happy to. Yeah.
Thank you. And I think the answer you were looking for before is 8 minutes is the how long a battery would run.
It's such a disingenuous point. Batteries aren't designed to do that, Mr. Van.
It's not what they're designed for.
All you've done is talk about, you're completely off topic of the terms of reference. You haven't addressed how these current conditions, these ideological beliefs that you follow, are affecting Australia's export industries. You're silent on that. You're so disingenuous yourself that you're using this committee to push an ideological point as opposed to participating in an inquiry with genuine terms of reference.
Excuse me, Chair, we're not here to attack our witnesses personally. I don't think we can ask questions, but we're not here to cast aspersions on their intentions or otherwise. I think Senator Van had a good go with
I'm just trying to pull the witness back to the terms of reference.
No, I think you are actually casting aspersions on their intent, Senator Van. I don't think that is well behaved in this committee. Unparliamentary.
Well, thanks very much, Deputy Chair. I'm going to pull it up anyway because it's hit 12:50.
Chair.
Thank you.
Chair, can I get a chance to ask a question, please?
Make it very quick, Jared. One question if we can.
Okay, so my question is, we always talk about reducing emissions, but ultimately reducing emissions are a means to an end. Do the witnesses know what the temperature will be by 2030 and 2050 if we reduce emissions by 26% by 2030 and go to net zero by 2050?
I'm happy to take that.
Yes, thank you.
What the temperature will be in 2030 is dependent on what all global actors do, Mr. Rennick. I think you're aware of that, right?
Yeah, I am aware of that. So let's say everyone meets their Paris targets agreements. What will be the temperature by 2030?
Well, the science suggests that if existing targets are what plays out over the next out to 2050, then we're looking at more than 3 degrees of warming by the middle of the century. That's what the science says.
Okay, and what's the science say the temperature will be by 2030?
Well, we're already at 1.1 degrees of warming. I suspect it'll be somewhere near 1.5 degrees.
1.1 degrees of warming from when?
From pre-industrial levels.
Pre-industrial levels. So which year exactly?
The mid-19th century is pre-industrial.
Right. Okay. So what will the temperature be by 2030?
If you look at the current science, it suggests somewhere in the range of 1.4 to 1.6 degrees above warming, above pre-industrial.
So what the average temperature now, say about 15 degrees, so you're saying the average temperature of the Earth by 2030 will be 16.5 degrees if we don't get this right?
That's not how it works, sadly. It's not just adding 1.1 degrees to every day of temperature. The 1.1 degree rise is over the course of a year across the globe. And what you tend to see is heat extremes at the end. So instead of a 40-degree day in summer, you get a 45-degree day. In winter, instead of getting a 12-degree day, you might get a 15-degree day. So it's not a uniform 1.1 degree add to the temperature. That's not how it works, and you're well aware of that.
But the whole Paris Agreement is based on limiting temperature increase rather than volatility of the weather, isn't it?
Well,
shouldn't it really be
the science suggests
deviation from
that
mean?
the increased warming contributes to more extreme weather.
But it doesn't make the average temperature hotter.
Of course it does.
Okay, so it's both. It's going to be more extreme and hotter?
Correct.
Yes.
Right, by 1.5 degrees.
I've just explained what that means in terms of extreme temperatures, Mr. Rank, but if you want a science lesson, I can direct you towards any number of climate scientists.
I'm just trying to work out what the benchmark is for 2030, right? Because all these emissions are a means to an end, and we need to have a benchmark by 2030, and you're saying the benchmark is 1.5 degrees. So we've got a limit. If we don't meet Paris, the temperature of the Earth, average temperature of the Earth's atmosphere is going to be 1.5 degrees higher. Is that what you're saying?
Well, it depends on a whole bunch of variable factors, like what other countries do in that 10 years to 2030.
But Australia's also included. So my question is, why should we abolish thermal coal mining but not yet reduce consumption from people who live in inner cities? I mean, why don't we say to people who live in inner cities, you can't drive your car to work 2 days a week? I mean, why is it that people in the regions, in the mining regions, are expected to carry job losses when people in the city, there's no emphasis on them to reduce their consumption?
Mr. Rennick, if you're pushing public transport as a policy option, I'm all here for it, mate.
Yeah, so am I, but that's rarely ever discussed in these ways to reduce emissions.
Well, certainly if you look at any sort of transport.
But both myself and the chair, Mr. Christensen, are both advocating for an infrastructure bank. Unfortunately, we have no control over that because the Keating Labor government outsourced responsibility for monetary policy to the RBA. But that's a discussion for another day. But I just want to know what the clear benchmark is for 2030 so that we can hold all this money we're spending on renewables
point of order,
to account.
As fun as it is to listen to Senator Rennick learn the basics of climate science, we are running behind as a committee.
We are running.
Sorry, Senator Fields, but could you not make reflections and imputations on other senators? And if you ever want to debate climate science,
Senator Rennick, I'm going to get onto that in a minute, but I will call it up. I will have to call it up.
Sorry, can I just clarify one point that Senator Van said? As we said before, this isn't ideological; it's an economic market-based decision.
I'm sorry, I'm really going to have to pull it up because we are behind. Can you please provide that to us in writing? I'm happy for you to clarify, but we are just we've had the next witnesses waiting for 20 minutes now. So if there's any additional information, including what you're saying, and I'm sorry, I'm going to have to cut you off. Please provide it to us by Wednesday, the 11th of August. You're going to be sent a copy of the transcript of your evidence. You will have an opportunity to request corrections to transcription errors. I don't normally do this as a chairman, but I do thank the witnesses from Ethical Partners Funds Management As for the ACCR, I haven't seen a more hostile witness in all my time chairing. You've been evasive, you've been hostile, you've been rude, and I don't thank you for your appearance here. And I don't
Thank you, Mr. Chairman. I hope you enjoy your protest on the weekend.
I don't think
Thanks
any
very
reputable
much, Mr.
company.
Gocher.
No. Please be quiet. Silence. I'm speaking as chairman. I don't think that any reputable company
George, this is
should
a complete misuse
no.
of your
I don't think
position.
any reputable company should engage your services.
Mate.
You're out of
This is
order
not how
now,
a
Senator
chair.
Steele John.
This
You're
is
out of
not how
order.
a chair behaves.
You're out of order,
It's a
Senator Steele John.
complete misuse of your
And
position.
I'm going to ask the
It's not your
Secretariat.
role to
I'm going to
berate
ask
the
the
witness.
Secretariat to silence Mr. Steele John.
It is not
I'm
your
gonna
role to berate the
mute
witness.
him. And please.
It's not your role, Steele John, to impinge
This-
on the reputations of
and that
other
is exactly
committee members.
George just
I'm
has
now
relation to Mr. Gocher.
I'm now before we go
Disgraceful
to our next
behaviour.
witnesses.
Chair, can we
point
just
out
finish
your
this now,
disgraceful
please?
behaviour.
Chair,
No,
just finish
we
up.
are finishing it. We are finishing it. We've finished with the witnesses that we have. We'll move on to the next witnesses.
Thank you, Mr. Chairman. I enjoyed it immensely.
Thank you.
And I'm just going to say to Senator Steele John, at the beginning of every single comment that you have made, you've disparaged this committee, and it will stop now. You disparage the committee once more, and I will not take any further questions from you. So please stop that behaviour. Might fly in the Senate, it's not flying in my committee.
George, you just spent
doesn't fly in the
conclusion
Senate
of the
either.
session
No,
berating a witness. All right, mate.
Well,
You can't.
I ended
you
it
can't
because
do
that is the
You
first
can't
time
do
I've
that.
done that, because that witness was extremely hostile
No, they
and rude
weren't,
to
mate.
people.
They
They
were
were.
not.
They were indeed.
And I would
Well,
contend to
that's
you,
that is
Mr.
your
Chairman, that
opinion.
nothing I have
That is your
said
opinion.
in the framing of my question goes any further than any of the political framings that Senator Van has placed around his question. All right.
Okay. Well,
So let's
when
just
I
apply this
introduce
fairly,
you for questions
okay?
now, I'll be fair. When I introduce you for questions, you want me to call you a climate alarmist and an extreme green. I don't want to do that.
I'm
But if you're going to
definitely an
disparage
extreme
the
green.
committee,
Please
I will do that.
declare me an extreme green.
I will call you a coal job killer before I introduce you. You want me to do that? And
Go
please,
ahead,
I won't
buddy.
do it. I won't do it.
Buddy.
But don't disparage this committee.